Since I've been talking and investing in GameStop for the last 2 years, people have been suggesting to me that I have a look at AMC too. And always my answer has been that it doesn't have the same catalyst as GameStop and therefore I did not invest in AMC. But it seems that I was wrong. Because you look at the performance of GameStop, I mean the stock, since the beginning of the year, and also AMC, you will see that AMC outperformed GameStop. But of course, if you are looking at the long term, then GameStop is doing much better. I invested in GameStop. On some trades, I made 11,000% profits. On average, I made over 3,300% profits. It would have been impossible to have the same returns on AMC. So I made the right choice choosing GameStop over AMC. But what if I listened to those people who told me when I sold GameStop earlier this year, who told me to invest in AMC? If I had to listen to these people, then maybe instead of me just making 170% since the beginning of the year, I could have made 300%. If I had invested all my GameStop profits on AMC, was it really a mistake from my part from not doing that? These are the questions we are going to answer in today's video. But first, please make sure to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am a popular investor on eToro, where I manage assets for over 1,500 people. So please subscribe and hit the notification bell so that you don't miss the coming videos. Let's first talk a little about GameStop. I know I've talked a lot about it, but just to summarize, if you're new to the channel, you don't know why I invested in GameStop. The first time I bought GameStop was in September 2019, nearly 2 years ago. It was because the stock was a cigar per stock. It was not doing great at all. Sales were falling, net income was falling, but I invested in the company because I knew there was a new console cycle coming. Besides, Michael Burry was also investing in the company and he wrote them a letter to the board asking them to buy back shares. So if they were going to buy back shares, eventually it would be good for the current shareholders of GameStop. That's why I bought even more shares of GameStop when Michael Burry wrote that letter and he was also buying shares of GameStop. Besides, if you look at the balance sheet of the company at the time, you would have seen that it was a cigar butt stock, like I said, with more cash than market capitalization and also more cash than debt. So they had enough cash to repay all the debt and buy back the whole company. That's why they were able to buy 35% of the shares outstanding back in just 1 quarter. With the new console cycle coming, the PlayStation 5 was coming, the new Xbox was coming, I was sure that eventually the stock will recover because the profits, the revenues will be bigger. The reason why they were losing money in 2018, 2019 was because of impairment of goodwill. But if you look at the free cash flow of the company, it was still positive. So with the new console cycle, this was a catalyst on the stock, on the company, and consequently, I expected that the stock price would go up. A few months later, I discovered something else with GameStop. When I was playing with the number of shares, I saw that more than 85% of shares outstanding were short and over 200% of float. It was on the brink of a short squeeze. That's when I was 100% sure. Okay, not 100% because you always need to take a margin of safety. Let's say 96% sure that GameStop will be a 10-bagger. And I was right about that. I am one of the first persons to predict that short squeeze. I did not know about Wall Street bets, about those people who predicted it also at the time, but at the time when I said we are going to see a short squeeze, I thought I was the first person who did it. And then later, Ryan Cohen started buying shares of GameStop. This was a new catalyst, so I was sure that this was the right investment for me to make. It was 8% of my portfolio at some point. I was down 60%. I was buying still more and more because I was so sure about this investment. Until eventually, we had the short squeeze, and we all know that this is going to be in history books. The short squeeze was inevitable. It had very little to do with Wall Street bets. These people did nothing at all. It was caused mostly by institutional investors, hedge funds who were buying GameStop. Of course, the institutional investors on CNBC, they will say Wall Street bet, but CNBC had a bigger role to play on this short squeeze than Wall Street bet. But for AMC, it's a little different. You're not seeing the same thing. And here, Wall Street bet is actually a little more powerful Because with GameStop, the short squeeze would have happened without posted bets. It was inevitable. All the fundamentals were here. But for AMC, it's not the case. So these people on Wall Street bets, these teenagers, they are trying to cause a short squeeze. Of course, they cannot do it alone. There are hedge funds helping them. Why do I say that this is different? It's because first of all, the catalysts for AMC are not here compared to GameStop. With GameStop, even if for 7 years sales have been going down, you could expect with a new console cycle, sales will go up. It's something that should be expected. Sales will go up because of the new console cycle. People will buy the new PlayStation 5. But AMC has a different business. Nobody is expecting a big movie after 7 years and then they're going to watch that movie. We have new movies every month, every year. It's not the same thing at all. Besides, the revenues, the profits of AMC were growing compared to GameStop. So you may say it's better than GameStop, but if you look carefully, it's because they have been making quite some good acquisitions. Yes, they were growing, but not that great actually if you ignore the acquisitions. So AMC, in my opinion, it would not have been a good business for the long term because there were so many headwinds on that industry, on that company itself. For example, streaming with Netflix, with Disney Plus, it would have been hard for AMC to survive the next years. Of course, they would still be profitable, but they would be forced to close stores. Same as GameStop. Same as GameStop. But GameStop has this catalyst. Because of this new console cycle, the stock price could go up. Not with AMC, it was just going down and probably would still have gone down. Besides, when Ryan Cohen joined GameStop, he was trying to transform the business, going online. We cannot do the same thing with AMC. You go online on AMC, it means you watch Netflix, which is another business. And the pandemic happened. The pandemic, it was bad for GameStop, but they were able to manage it. They were able to become profitable from this pandemic, but not AMC. And at some point, you do realize that AMC may never have the same profits and revenues as they had pre-pandemic. I don't think it will happen again. Of course, if we have inflation, then prices will go up. But adjusted for inflation, I don't think AMC will have the same revenue, same profit. It has already peaked. It was in no case a value stock or a deep value stock, a cigar butt stock or anything. It was just a stock fading away, and in my opinion, it was a bad investment. So that's why I did not invest in AMC since 2019 when people have been talking about this stock. Now let's talk about the balance sheet of AMC. As I mentioned, they made some good acquisitions to show that their revenues and income are increasing. But actually, they took a lot of debt to make these acquisitions. They had a bad balance sheet. They made acquisitions, of course, they had goodwill, but if you ignore the goodwill, you look at the tangible book value, it was negative. It was negative. With GameStop, the tangible book value was higher than the market cap. So that's why I say GameStop was a cigar but a deep value stock. But you could never say such a thing with AMC. It's not because it was cheap that it was a good investment. Let's say it was a $300 million company, but it had 2.3 billion US dollars in minus 2.3 billion US dollars in book value, tangible book value. So it's not a cigar butt stock at all. It's not because it's cheap, it looks cheap, 300 million, that it is cheap. You need to look at other numbers. If in the worst case scenario for GameStop, let's say the company had to be liquidated. Of course, it was impossible for them to go bankrupt, but let's say they had to be liquidated for some reason. You actually make profit because tangible book value, the liquidation price is higher than the value, the market cap of the company, the price of the company. But with AMC, no, you lose money. And besides, like we mentioned, to make these acquisitions, AMC had to take debt. GameStop, on the other hand, they were lowering their debt balance. They were paying back their debt. They converted some of their debt which was due in 2021 to 2023. And they were repaying most of their debt. They also were buying back shares. AMC, they were issuing more shares. You will see their number of shares outstanding vastly grew in the last years. So it was the total opposite of GameStop, what they were doing. As far as the short squeeze was concerned with GameStop, I did not invest in GameStop for the short squeeze. I always said that this was a bonus. I knew it was going to happen, but it was a bonus for me. The short squeeze, bonus. The fundamentals, that's what I invested in. AMC, we did not have fundamentals, but it was possible because it was heavily shorted that we would see a short squeeze with AMC too. We saw a short squeeze with UNFI, a company I own, so it's not that uncommon to see short squeeze. Even with Tesla a few years ago, we had a short squeeze. With our Edge, we had a short squeeze. We are still having a short squeeze. But that GameStop short squeeze, that's once in a lifetime. I don't think I will ever find such a short squeeze again. And I don't think you will. It's a once in a lifetime opportunity. But with AMC, the probability of a short squeeze happening was not that big actually. For GameStop, I said it was inevitable, but AMC, since they were issuing more shares, there was no reason for the short squeeze to eventually happen. Maybe the short sellers made the right choice to short the stock. So why are we seeing a short squeeze today? It's because of those Wall Street bets trying to do the same thing they did with GameStop. But here, of course, again, there are institutions, hedge funds helping them. They don't know about it, they think they're changing the world, but actually, there are many hedge funds profiting from GameStop from AMC. But here, if we ignore the short squeeze, which is just a bonus, we focus on the fundamentals, there are no real fundamentals for AMC to cause the stock price to go up. If you want to invest in AMC, that's just speculation, that's not investing, that's just gambling. If you made money on AMC, good for you, congratulations, but now you should be careful, thinking about the future. Should you keep investing in it? Should you keep gambling in this? Because you can get lucky, it happens sometimes. I even got lucky on some stocks. You can say that on GameStop because of what happened on Reddit, the short squeeze happened sooner than expected, and you may say I got lucky, but I won't say I will say I did my homework, but there's some element of luck. But let's say on AMC you got lucky. It's like winning the lottery, you got lucky, but you can win the lottery one day, the next day a coconut fall on your head and you die. So luck works on both ways, you need to understand that. It is the same thing that happened with the Tulip Mania in 1637. This Reddit Wall Street investing, retail investor, this is not something new as people are thinking. Those people who are saying this is a new era of investing, they have not read history. You should read about the Tulip Mania in 1637. It's retail investors who caused that. Of course, they were institutions, but when you say retail investor, that's when you know there is a bubble. With GameStop, it was an inverse bubble. There were so many people shorting it. But with AMC, right now the bubble is up. I'm not going to talk about GameStop again because I think GameStop today is in a bubble. There is no reason for it to be at such a price. But AMC, it's even worse. Whenever you are making an investment, always focus on fundamentals. Short squeeze, margin calls, these things happening which are specific to the stock, not the company. Take all of this as a bonus. Even buybacks, even dividends, these are bonus. Focus on the business, the fundamentals. The bonus, of course, you can think about them, but do not make investments solely based on them. 90% of your investment should be on the fundamentals. So let me know in the comments what you think about AMC. Thank you for watching this video. Please like, subscribe and share. Please watch these two videos, see if you missed them. Have a nice day and goodbye.